Hello, everyone, and welcome back to another episode of the CryptX Live Wire. As always, I'm joined by my co-host CJ Reichel, and as you can tell by the title of today's episode, "Why is Bitcoin dropping?" We got some heavy tape to talk about. Altcoins down big today. Also, want to dive into some that I think have potential to reach market lows if Bitcoin continues to fall. But CJ, how are you doing today, my friend?
Good, Monty. I'm good. Um, and yes, the title of today's video is "Why is Bitcoin dropping?" So I want to cover a couple different reasons why. But first, make sure you check out the 2-week free trial at CryptX, stickytrades.com/CryptX. But first thing that I'll share here is just the Bitcoin chart. And, I'd say the first reason why Bitcoin is dropping, if we had to point to one, is simply we're running out of time in the cycle. We've had over the last 12 years, these 4-year cycles in Bitcoin where we have 3 years of an expansionary bull market and 1 year of a bear market. And that bear market has occurred in every midterm election year. And we're going to approach another one as we go into 2026. So, we've seen that 3-year expansionary period. And now, the things are just kind of heavy and the trend is switching to another point. Also, in terms of if we were to look at technical confirmations of price entering a bear market, usually when we get 1 to 2 weeks close below the 50-week moving average, that has been confirmation that price is entering into a bear market. And we've seen that in terms of the bear market checklist as well. So those two things I think are very key in terms of the cycle. And I think that, if you looking back in 2022 or 2023, if you said when Bitcoin was 17 to 20,000, all right, in 2025, price is going to hit 125 and that's going to be the cycle peak. I think we would all at that point say that's fantastic. That's great. That's a 700% increase. We'll take that. But now that we're here, I think it's just natural human nature to want more and to expect more. And so I just don't see us rallying to new highs. I think there's probably an 80% chance that this peak is in and lower targets remain at 60,000. But that was the first reason, just the cycle view. So if we ignore the cycle and say the 4-year cycle is dead, right? I know there's a lot of people saying that the Fed has refinanced debt in terms of a 5-year cycle. So therefore we should be in a 5-year cycle and Bitcoin should make new highs in 2026. Well, I don't know, that argument I'm open to, but to me, it seems like more of a excuse or trying to fit an explanation for why Bitcoin hasn't hit higher targets like 150 or 200,000 when we have had the perfect conditions for it to do so. We've had AI stocks go into bubbles, things like Oklo. We've had obviously silver and gold do tremendous, as well as the S&P 500, and Bitcoin's just not really able to find that bid. But yeah, anyways, ignoring the cycle view, what about the monetary policy view? I see, a lot of people on social media, on Twitter, particularly last week, are saying things like, I cannot believe people are selling Bitcoin while the Fed is doing QE or while the Fed is doing quantitative easing. And that may be true, but when the market fails on something that should be bullish, that's very, very important to pay attention to. And I think it's also important to realize that, September 2019, we had a very similar circumstance in terms of how the Fed was cutting rates. And we had apathy in Bitcoin in 2019. Like, there was not an immediate rally just because the Fed cut rates. It wasn't until COVID where Bitcoin went to 3,000 and we had to have massive amounts of QE that it could actually rally again. So, and another thing going along the liquidity argument and, the monetary policy argument, Bitcoin has officially decoupled from global M2 growth, and things like gold and silver haven't. So I think those are like very strong signals and reasons why we are and kind of continue to go lower here as the tape continues to look a little bit heavy. But that's just why Bitcoin's falling. We can talk about that. I do want to finish by talking about what we're seeing in stocks in the NASDAQ. But Monty, anything you'd like to share or any comments or feedback of those? I do.
Yeah. Thanks for that insight, CJ. It's always good to step back and look at kind of the macro perspective and where we're at in the market cycle. That's very important for Bitcoin. And like you pointed out, it's decoupling from M2 and from precious metals, which is something we haven't seen before, but we, not during a bull market at least, but we have seen Bitcoin show signs of resilience during bear markets, and people seem less shocked during those periods of decoupling than they do when the market in M2 is looking strong and we're seeing Bitcoin underperform. So both scenarios are equally likely, but it just seems more shocking when the market's rallying to the upside. We're seeing tech stocks soar and Bitcoin is just unable to do anything. But I think CJ made a good case, and there's other reasons as well that I want to talk about. Just one quick reason, and this will kind of segue into some of my altcoin discussion, but this is Bitcoin's relative spot volume or spot relative volume across the last 30 days on all exchanges. And as you can see, it's very muted. Um, we're not seeing speculation from retail traders whatsoever. That's what this is a good indication of. Whenever you're seeing spikes in this, the market tends to be at a frothy period where we have lots of retail participation in the market. Right now, very, very muted. Less than less than $100 million in volume on a weekly basis is very, very low. And as a result, Bitcoin's been suffering. We need to see more exchange volume come in, more retail demand come in for price to go higher. And we're just not seeing that. So just looking at Bitcoin's spot exchange volume, it's not looking great. It's telling us that perhaps we are in for a period of extended correction because ultimately, without this retail speculation, we're relying solely on institutions and ETFs, and those have been showing net outflows in the last week as well. So across the board, not a whole lot of reason to be bullish from a just merely volume perspective. But I want to kind of take this and extrapolate this to an altcoin that I'm watching closely. I haven't published a trade insight on this one yet, but I think the setup is looking pretty strong, and that's Uniswap. So Uniswap is a decentralized exchange where you can trade altcoins, and its volume has been very low over the last 30 days. We obviously saw a spike in volume when we saw this spike in price in early November, but since then, the funding rate got massively over positive here. Liquidations occurred, driving price back down to the $7 level, but now we're below the moving average. Volume on the exchange is very low. It's seeing less than $1 million a day in total volume exchanged, which is very, very low for Uniswap. And you can really look at this chart and extrapolate it to altcoins. Whenever this chart gets a little bit frothy and you're seeing high spot relative volume, you can expect there to be altcoins being traded as well. But here you can see the volume is very low. The tape looks heavy, and I expect this to retest the lows at around $4.75. So this is one that I'm watching closely. The funding rate right now is neutral, which is good. That's a healthy level. It's telling me that there's not too many people piling into this one short, but it is outperforming to the downside. It's down over 4% today. Bitcoin is only down 1.3%. So this is a high beta option. And based on the technicals and what I've been seeing so far, I think that Uniswap looks very weak and looks set to retest the lows. So keep an eye on that exchange volume. I'll be posting it in our Telegram group if there's any spikes in volume or anything changes. But for the short to medium term, I like getting short Uniswap just until the volume comes back, which typically happens when we see Bitcoin charging towards new all-time highs, and we're clearly far off that point.
Yeah, especially when you consider like when a lot of the volume previously in Bitcoin was coming from institutions. It's just retail participation is not what it once was.
Yeah.
I don't know who's still holding Uniswap as an investment. But all right, so that's Bitcoin and the crypto market. But there's kind of a larger cloud looming overhead, which is the larger, broader market, namely the NASDAQ, Qs, ES, S&P 500. So earlier on in 2022 and 2023, as the bull market was beginning, I would write down stuff, characteristics of things that we would expect to see near a market peak in the NASDAQ. Couple things. First was what we've seen most recently, where we're getting rate cuts, but the market is starting to fail on these, should be bullish rate cuts. That's not good, right? The entire reason like the market was rallying through 2023, 2024 was because we were skeptical and those rate cuts were being priced in, 12 months ahead of time. Now that they're here, people expect that that should immediately result in bullish price action. And what we're seeing is it's just not. We're also starting to see things where there's really two dynamics driving this entire bull market since 2022 in equities. The first component is the AI component, and it's no longer driving stuff higher. We had bullish earnings in Nvidia and Palantir, and ever since prices failed off those bullish earnings, and those stocks have yet to get above those highs of those bullish newsprint days. And let's not forget that bull markets top on bullish news all the time. You also have stocks like Oklo, stocks like Iron that are down, 50% now after. So those bubbles are starting to really unwind. And so AI is no longer driving the market higher like it was. The second component that was driving the equity market higher was this whole liquidity thing and the Fed pumping and lowering rates. And now the NASDAQ is starting to fail on those types of narratives. So if those two things that were driving the bull market this entire time are starting to fail, then what's it going to take to turn price back around? I don't know, but I think that we're in a very vulnerable situation. Also, when we look at positioning data, which is arguably the most important thing, we're starting to get COT reports back, and we're all caught up through November 21st. And what November 21st was showing us is that large speculators and small speculators were crowded long in the NASDAQ. So when you have that positioning lined up and that asymmetry in terms of the risk reward now being optimal to the downside, it leaves longs very vulnerable in this market. And I know shorting the stock market is like a horrible trade over time. But in the terms of like the things that you would want to see to de-risk and to look for a potential downside move, I think this is it. And then the final component is really showing up in price. And what I mean by that is that the NASDAQ's been really lagging the major indices all throughout the past month. So, this has happened through a lot of market cycles, whether it was 2000, 2007, but very oftentimes the NASDAQ will come up after declining. It'll make a lower high, whereas the S&P 500, the Dow, IWM, they'll all go make a new high. But the fact that the NASDAQ's lagging and making that lower high, that happened. I'm not saying this is the top, right? I'm not making any predictions. Okay. I'm just saying this is what we typically see during like those end market rally phases. So I think that's, even if this one isn't the top, I think we're starting to get closer to that idea that, we just got a lot of crowded longs at the top here. And the last thing I'll say is that so far, in terms of the administration, Trump is probably the most S&P 500 conscious president that we've ever had. And so far, he's been able to get the market to do everything that he's wanted it to do, basically go straight up. But what happens, we have to ask the question, what happens when market forces are ultimately stronger than politicians and the Federal Reserve? And that could result in some interesting vulnerabilities, but I'm not making any predictions. I'm just saying this is kind of the factors that we would expect to see near some type of, macro peak, a failure in many of those things.
Yeah, absolutely. I think we're checking a lot of the boxes. Like you pointed out, it's not always obvious when a bubble is popping, but there are signs. And I think we are seeing a lot of those signs right now. And we're seeing signs of market fatigue as well, like you pointed out. So whenever we're seeing those signs, it's worth taking note. Just a question to pose to you. You talk about, you said shorting the stock market, obviously not something you would do in the long term, but right now there are opportunities across the board. Anything in particular standing out to you as a good short play to the downside, or are you looking at alternatives like maybe trading the DXY instead of trading the stock market right now?
Yeah, I'm not really in sync with the FX market right now. I can't seem to figure it out, just because we are
It's
not
tough
really
without the
seeing
COP data. Yeah.
exactly. Also, some of the interesting things we see, just as a side tangent, is like we saw crowded large speculators short the Canadian dollar and the British pound that were providing, COT long setups November 21st. Ever since the past few weeks, we can see those have done really, really well. I wish we would have had that data, but yeah, so it's tough to figure out the FX market. But I would say if we're just going on a positioning and technical perspective, I want to bring up IWM. And then I also want to bring up the 7-point trading checklist. So let's type in IWM. And the IWM and the Dow, I've said this many times, I'll say it before, these are the indices with the companies filled in them, which are most sensitive to interest rate increases or decreases. So and they've responded that way so far, but we'll see. We'll see if they lead on the downside. But what we're seeing in terms of the 7-point trading checklist in IWM, 7 out of 7 signals are currently bearish. We have yesterday bearish engulfing candle, elevated volume reversal, prices over one standard deviation above the 20-day moving average now. Obviously, gaps below price. Our oscillators are, obviously turning down as well. So all of that was triggered, Friday. And so, like I said, I really hate shorting the stock market. Because the stock market is upward drift over time. So it's just not a great trade. You got to make sure a lot of things are really lining up, in my opinion, if you're going to go short indices. But I think this is getting close. That's what I'll say. I think these are getting very close.
Yeah, that looks to be the case, and we'll keep an eye on those very closely as the week goes on. I'm sure AJ has some ideas as well, so keep a lookout for some of AJ's trade setups this week because he tends to know how to make money during a bear market, so definitely look out for that. But I think that's about all we got for today. Thank you guys so much for joining. As always, check out stickytrades.com/cryptex for a 15-day free trial of my and CJ's service. We post insights in a Telegram group. It's open 24/7. And if you guys want to just come in, ask questions, you can feel free to do so. We're always there. And also, we will be doing a weekly member webinar that will be tomorrow. And we'd love to see you there. So thank you guys so much for watching. Have a great rest of your day, and we'll see you again soon. Take care.